Hello everyone, welcome to this weekend market analysis. Sincerely, I do apologize for the longer silence. I'm sorry you haven't heard from me for some time now. I've had a little emergency and I just had to sort myself out. Okay, well, we are now fully back again into the market, trading again, looking for possible trading opportunities to get involved. This market analysis is going to be a bit of interesting one, so I plead with you to be patient. Watch the video till the end. Okay. All right. Last week was a bit of a volatile trading week with interest rate and employment data pumped into the market. Canadian dollar and the Australian dollar, especially, we saw some market volatility. Those indeed created some interesting market conditions that we are going to be looking at in just a moment. First, let's look into the Forex Factory economical calendar to see those high impact news announcements that are scheduled for this upcoming trading week. Now, we still have some heavyweight news announcement that are scheduled for this week. We have interest rate announcement for the American dollar, FOMC on Wednesday. Okay, on Wednesday, that news item will be released. Heavy news item there. We also have interest rate announcement for the sterling pounds. That will also be pumped into the market for the sterling pounds. Heavy news announcement there. So we expect most of the market extreme volatility, extreme violence to come from the American dollar crosses and the sterling pounds crosses. Again, another thing you want to bear in mind is that this week is going to be the end of the month. All right, so the monthly candles will be looking out to sign off their signatures of the market for the month of January 2020. So we are going to again be seeing some market volatility as the month comes to an end. So all we have to do is to be professionally positioned, strategically positioned to catch up with the trading opportunities that will develop as these events unfold themselves. All right, very quickly, let's move into the charts and see what is waiting for us. The first pair we would like to deal with here is the euro against the American dollar. This is the weekly time frame. Now, there is no need going to the monthly time frame because price has been in a very thin volume, moving sideways for quite some time. Extremely difficult to analyze. Okay, that kind of thin market around India. Okay, all right. So let's just zoom in the charts to see what we have. In a broad perspective, in a broad sense, we have anticipated a possible expanding triangle. The price seems to be swinging up and down, even though we are seeing some sideways bias here. Maybe we could get price pushed to the upside again, and so we are a bit hesitant with the short opportunities. We are a bit careful. What we can see here is that we are not seeing a straight move to the upside. We are not seeing that. What we are obviously seeing here is the price has gone sideways. Okay, price has gone sideways. In fact, from here, price has taken this sideways bias, swinging up and down right that area. Okay, so we need to just see what's going to happen around this zone. Okay, that area, I'm going to just mark that area right there. Okay, that's it. That's a sideways bias. The price has been sideways around that zone, so we need to be extremely careful looking for short opportunities around that area. Okay, just give me a little minute. All right, sorry about that, just a little hitch there. Okay, so I was talking about price taking to a sideways bias. After that push, we are now seeing that sideways bias right there in the euro against the American dollar. So we have this area here as resistance and this one here as support. If it breaks through, if it push below, if it breaks through that level, then we are likely going to see price come back again to this area. Don't think that is likely going to happen. That is not don't really think well, anything can happen, but to me, if this expanding triangle is going to hold true, then we may be seeing some bounce around this area again for price to push up, maintaining this range. Okay, maintaining this range. My conclusion here is that this area here, I'm just going to see if I can get that okay, around the 1.098 for area, 1.0984 area, anywhere around in there is the best point to begin to look for long opportunities. It is the optimal area to look for long opportunities from there on. Okay, all right, let me just color this in red, keep it within the daily time frame, also color that in red. Okay, weekly, daily. All right, so let's move into the daily time frame and see what's been going on. Okay, so too many lines here. All right, let me take out the ones we just drew now, so we can get a proper perspective of what we had previously. Previously we had this rising trend line, okay, in the daily time frame. We also anticipated this one right here. Okay, price took that bounce, hesitated, couldn't push to the upside, and now we are getting a breakout. All right, a breakout of that level. In fact, that was a confluence point, that area there. Let me zoom in for you to see clearly. Okay, so this was a confluence point. You can see that area, this level of support coming together around that rising trend line. Okay, it was a confluence point. Price came in there, hesitated for 3 days. You can see the hesitation candle, then eventually we got the breakout. Okay, well, as soon as I saw that, I knew this overall pattern here, this pattern has now come to an end. Okay, that pattern has now come to an end. So what we need to do, we need to simply delete those lines. We'll just simply remove the lines. I'm going to remove all of the old lines, just these ones. Okay, this one can still be there, but I am really not giving it more I'm not giving it serious attention anymore. Let me just show you what I am thinking of. Okay, I'm going to keep these ones. I'm going to keep this area here, that's resistance. I'm going to keep this level. This is a key level as support. Okay, any bounce I get here, I'm interested in going long. Again, we have this level, that level. In fact, we have a channel. I'm going to change that color to green. Okay, right, then we have another one here. Let me just a bit more precise. Okay, so we have price swinging up and down within that channel. All right, so this is the current pattern that has been holding price right now, that pattern. So we need to look around in here to see how we can get possible entries for the euro against the American dollar. Price is sideways, price has taken into sideways bias. This is resistance and this is what? Support. Price is currently trading close to support zone. In the Forex time frame, let us get our lines right. Forex time frame. All right, the upper boundary is more of an area. I'll just keep it that way, even though it doesn't really look very precise. The upper boundary is more of an area. Okay, fake breakout there, bounce there, bounce there. The lower boundary, this one here, right? So price is actually coming very close right here. At best, we want price to give us some bang of that area. This is where we are going to be reading price to see whether we get a bounce or a breakout. Okay, this is the decision taking point for the euro against the American dollar. All right, so let's keep that interesting times ahead. And in my feelings here, what I am seeing is that we are likely going to return to the upside with the interest rate announcement. But let's see what's going to happen. Like I said, anything can happen in the forex market. We are going to trade the reaction. We are not going to trade our feelings. Okay. All right. Let's move on to the next pair. Next pair is the sterling pounds against the Swiss franc. In the sterling pounds against the Swiss franc, in the very long term, the monthly time frame, you can see that price is trading around resistance area. Okay, so that resistance area, we should be interested in looking for short opportunities. All right, position established. We should be interested in short opportunities. In the weekly time frame, same thing. We got that rejection of that resistance zone, and the same surprise is beginning to turn to the downside because we are now seeing some lower swing lows. All right, some lower swing lows. This low here is quite lower than some low around in there, so maybe we might have another low right there, then they pull back again and another low. Okay, so we're more interested in searching for short opportunities. In the daily time frame, well, I am just curious about that rejection around that level. If I have to take a risk in trading here, I will be looking to go short based on that price rejection. Okay, I'll be looking to go short. Although the price action here overall is extremely difficult to analyze. It's something that you may not be able to decide where to trade. Maybe just skip this level. Maybe this one here. See that it tends to be an area. Just mark that. Okay, it seems to be an area of resistance. See how price respected it right there. Okay, respected it here. Here we got a fake breakout right there. Resistance again, price has come back around here. Should also find resistance. All right, so maybe we should have price come back down. It's an area to take some risky trades, hopefully in line with the long-term directional bias. We should be able to have price come back down. Okay, all right, anyway, subscribers will get signals of how we intend to go, how we intend to trade any of these. The next one, well, let me just look into the shorter time frames. Okay, nothing here. Next one is the American dollar against the Swiss franc. Well, this was our bread and butter for this month. We made some nice profit of this pair. Just want to show you that in the long term, the monthly time frame price is in a range. Okay, in the range, and the optimal direction is that price is likely coming back down to retest the lower boundary of that range. Okay, so we should be more interested in looking for short opportunities than going long. In the weekly time frame, we also establish an expanding triangle. That's one there. We established an expanding triangle, even though price is beginning to show some hesitation around that area. We've got price acting as support. I still want to stick with the fact that price is coming down, possibly to the lower leg of that expanding triangle, or even breaking free, coming back to the monthly level of support as we have established as a range in the monthly time frame. So I am ultimately bearish. I am ultimately bearish in this pair, looking for only short opportunities. In the daily time frame, well, how do I intend to trade this? There are two possibilities here. You can clearly see the hesitation here. For those of you who are very experienced price action traders, you can see the hesitation around this area. So what are the chances? Well, first chance here is that we are going to have some channel formation. Just keep this lower boundary. I'm going to mark that in red. Keep it within the daily time frame maximum. Okay, Then the upper boundary of this channel should be somewhere in here. Okay. Now that's the first possibility. Let me try to keep that correctly. Okay, so this is the first possibility that price is actually swinging up and down and now back to resistance zone, and it's likely going to come back down to maybe now bank off the weekly level of support. That's the first possibility. The second possibility is that we may have an expanding triangle. I'm just going to use one of these. Is that we may have an expanding triangle. So let me take out this so you can see clearly. Okay, is that we may have an expanding triangle, and for me this is the most optimal zone. Should price make any attempt to that area, that is the most optimal zone to look for short opportunities. Okay, so in that case we'll be having some expanding price behavior before price comes back here. So two chances, like I said. One is that price may, okay, this is the aggressive approach, that price may react off that area, come here, or it may push up, react off that area, and come back down. However, the safest direction in this pair so far, the American dollar against the Swiss franc, is still to the downside. Price is still bearish, and it's important that we keep searching for only short opportunities. Okay. All right, however we want to trade this, well, we will let you know in the signal group. We will give you the signals and let you know our entry positions and how we intend to manage taking trades in this area. All right, let's move on to the next pair, the sterling pounds against the Australian dollar. Well, you can also see that in the monthly time frame, the very long term, price has been sideways. Okay, price has been sideways in very thin volume, most of which due to Brexit issues, global economic crisis. In fact, I'm just going to mark that that sideways bias. Let's keep that in blue color. Okay, that's the lower boundary, and this is the upper boundary right here. So every time a price reacts off this upper boundary and pushes to the downside, everybody screams and say, oh, it's over, Brexit is going to push up to a 1.10 level. Every time it reacts off the lower boundary to the upsides, everyone scream that it's over. In fact, that's what is going to happen. Price is going to push to infinity. That's how it has been banging off, on and off. Okay, this time around we are at the upper boundary, and so you must be extremely careful. Do not conclude that price is going to skyrocket. Okay, it is trading around resistance zone. This is technical analysis. Again, I do believe anything can happen, but we are going to stick to what we are seeing. Okay, to the technical picture that we are seeing in the chart until it breaks to the upside. So our expectation here is that price is going to react, then come back down again. And of course, if you're an experienced trader, you know the overall price behavior here gives us a hint that price may be crashing back down. Okay, all right, let's see the weekly time frame. In the weekly time frame, what do we expect? Okay, we have taken that channel position already, nothing much to draw here. In the daily time frame, what do we have to do now? Daily time frame, a bit tricky, quite difficult to analyze as well. We can have that upper level here. That's the most last swing in the daily time frame, and have it right here. Okay, then this one here has been broken, some hesitation there, bulls exhaustion to push to the upside. I do not believe in the bulls again anymore. I don't believe in the bulls at that area anymore. I can just keep this one. Okay, all of this, maybe this can be in the 4 hours time frame. 4 hours time frame, a bit difficult here to analyze. However, I have established that it is safer to look for short opportunities than go long, looking at a very long-term price action. So in the forward time frame, I am liking, in fact, in the 1 hour time frame, I am liking this price behavior here. Okay, very prototypical of the Hector Daville reversal formation. You can see the move right there. You can see the congestion, exhaustion. All we want to see now is a breakout. So we are going to mark the two key levels, level of resistance there. Okay, keep it within the hourly and the black, then level of support right here. Okay, now what I want to say is that I am more interested in looking for short opportunities. We'll get a breakout, we wait for the pullback, then we look for our reversal move. So that is obviously going to be a move, sideways price behavior, then reversal. This is a high quality type of price action. We hope we are going to get a breakout. If it does break to the downside, then we will have a high quality signal to go short. Those in the live trading room subscribers will of course be given the entry position if we get the correct signals to go short. Okay, all right, so we're more interested in short opportunities here. The next pair is the American dollar against the Canadian dollar, another beautiful one here that we may want to get involved. Price has been sideways again, lots of hesitation, swinging up and down, not really clear. We believe that price will still make some fall to the downside. Okay, so we just need to be a bit careful with the long opportunities. Also bear in mind that price is reacting off an area of resistance, so you need to be careful hitting your buy button against that level until it breaks. For now, it is more healthy, more safer to take the risk of looking for short entries as price trades around an area of resistance. So in the daily time frame, what do we have? Well, I just want to analyze what I am seeing here in the daily time frame. Again, channel. This could be the upper boundary of the channel. Let me just change the color of my line. Okay, keep this as the lower boundary. Okay, then now we have an established lower boundary. Let me zoom in my chart. Okay, an established lower boundary. Now we can take this as the upper boundary. Okay, now if we have been able to identify that price is in some sort of a channel formation, then this is an optimal area to take a risk. Okay, take a risk that price will come down maybe to the lower boundary before another bounce to the upside. So we have effectively the channel formation, and that is the pattern that we are seeing. So for me, it is an optimal zone to look for possible entries in the American dollar against the Canadian dollar. All right, so again, those in the VIP signal channel, you are going to be given some hints of how we are going to trade this. Oops, sorry about